Thank you and welcome to another exciting episode of The Trading Bell. This week on the program, we shall be talking about the real estate agenda. How has the coronavirus pandemic affected real estate uptake in the country? We'll be speaking to Mr. Dan Awendo, who is the Chief Executive Officer for Home Africa, who's handling one of the largest real estate projects in East and Central Africa. Before we start off, let's take a look at Dan's profile. Dan is a certified public accountant, management consultant, financial analyst, and an advanced management program graduate of Strathmore Business School and IEC Business School in Spain. Awendo has worked in senior management positions in both local and international companies and has been a board member of various companies and learning institutions in Kenya. Thank you so much, Dan, for joining us on the program.
I'm glad to be here today.
Okay. Right now, we're in a catch-22 as an economy. We have real estate taking a hit owing to, of course, the economic activities that have been slowed down by the effects of the coronavirus. The virus has led the government to take up different measures, such as cessation of movement, there's working from home, social distancing, and all this ties down to the economy, especially when we have a population that is trying to save every coin because of the uncertainty in the market and just trying to stay afloat as individuals. When human beings are pushed to the corner, other aspects of their social well-being, such as investment in assets, takes a backseat. From your experience, how have we had an impact, especially on the real estate, since the COVID-19 kicked off in the country?
Well, you're right that investments, especially related to real estate, do take a backseat in situations like this because at the end of the day, the capital outlay on purchase of a house or purchase of a piece of land is significant in all intents and purposes. And by the time you make the decision to buy an asset of that nature, a lot of the times you've spent a lot of time doing your research, you have borrowed, you probably have saved for a long time.
Sure.
And so you are in a place that you're now ready to invest. But when you're then faced with a pandemic situation where you don't know what's going to happen in the next month, in the next 6 months, very often you tend to take a slow pace at that investment. And you say, look, let me wait and see what will happen in the next couple of months. And if things turn back to normal, then I will go ahead and invest. But in the meantime, I'll wait. And so that affects the real estate players significantly, because when we have units in the market, you're expecting those units to continue selling in the same manner that you are selling. It's not going to happen as easily. And it's all across the market, whether it's the low end of the market or the upper end of the market, because the liquidity game. You want to keep as much liquidity as you can because you're probably being affected by salary cuts, you're being affected by the supply chain disruption, which makes things more expensive. And so you tend to hold as much as you can to prepare yourself for a worse situation if it does go that way, but also just to cushion yourself from any difficulties that you might find yourself financially in the next so many months. Interesting.
Yes. And as a company, have you witnessed any slowdown in terms of uptake of your projects?
Yes, we have, and I think we are not unique in the market, and not just in the real estate space, but also in other areas. But you can't sit and wait for that, to damage your bottom line. So we've taken different steps to try and really increase our coverage from a marketing perspective, but also from a market access perspective. For example, you will still find a significant number of people who have cash, are willing to take a bit of opportunity and therefore ask for large discounts for them to access assets and property that they would not have otherwise been able to access without the pandemic situation. So you have to be very targeted at how you market to this kind of people. they have cash, they are willing to put that cash away in the form of a property, but they want a deal. And so you have to provide flexibility to your team to ensure that you can book this kind of sales. The other thing that, for example, we have to continue doing now and do a lot more is online marketing. We were very comfortable with marketing to a market that is easily accessible physically. But in a pandemic situation where everybody is working from home, there are very few people on the roads moving about. It becomes necessary for us to get online and go online in a much, much bigger way. So we are spending a lot of our resources onto online marketing, digital marketing, and improving that engagement so that we can access more clients.
All right. And Dan, you raise a very important point when you touch on being flexible. Some developers have been stuck on their ground saying, if you can't service your project, if you cannot meet the obligations, they terminate. For you, what has been the experience with your consumers, especially now that we're facing difficult times? Someone perhaps was already taking a project on board, but financially they're unable to progress it on. Have you been able to make any adjustments, and for how long?
You have to make adjustments. Look, at the end of the day, while we are in real estate as a business, the cash flow that comes in is very, very critical. And that cash flow must continue to come in to enable us to continue progressing with our obligations and with our cost management and with other things that we're doing. And so we have two types of clients. We have a client who has continued to pay us over a monthly period. And this client is now facing salary cuts. That client, some clients are coming to a place where they no longer have employment. How do you provide accommodation? So you take a lot longer steps before you terminate than you would on a normal situation. So we have found ourselves with engaging that client to either bring down the monthly payment that they are doing, or even postpone some of the payment plans, so that they have an opportunity to access another job and continue their payment plan. So that's one type of client. But there's also the client who says, look, your land is 5 million shillings. Can we agree a price that allows me to pay over a 6-month period as opposed to a 3-month period? You again have to accommodate that client, because otherwise you're better off with the receivable as your asset than the asset itself, because the asset itself does not put cash in your bank immediately. But if there's a receivable and there's a commitment from the client that this is how I'm going to pay, you're better off with that kind of an arrangement.
Awesome. Talk to us more about your project. It's one of the projects that was touted to be a game changer for East Africa. Of course, funding challenges cropped in, and perhaps the project didn't eventually end up in the manner that you had anticipated. Talk to us about the uptake so far. How many units are remaining, and what are you doing towards plugging in the capital deficit?
Our project is still going to be a game changer. Remember, there are very few golf estates that are next to Nairobi CBD. We are only 22 kilometers away from CBD, which means it's the closest golf estate around Nairobi. We have almost 100 families who live there today. They work in Nairobi, so Nairobi is easily accessible to them. So we feel that we still are going to be the game changer. The difficulty has been the space at which we've been developing the project, and here I mean the infrastructure itself, the roads, the power network, the water, and so on and so forth. So because we've not been able to attract large capital to complete with that infrastructure work immediately, what we've done is to continue selling the parcels that we have and some of the housing units that we have there. And it is from that resource that we are using to build the infrastructure. So that's why it's a bit of a slower pace, but it's progressing. Now, at the end of the day, we have 774 acres of land A lot of it obviously has been put aside for the golf course, but also a significant part of it has been put out there for residential and commercial and hospitality use. A lot of those parcels are still available. So we have sold not a very big percentage. I think we are at about maybe 45–50%. We still have a large chunk of land that we would like to be able to sell. We would wish that we can sell it once the infrastructure is completed. But because we are still not there, we have to continue trying to sell to keep the progress of the project moving.
Interesting.
Yes.
And then looking at the project, I do believe it's still a game changer, irrespective of the economic circumstances, yes, currently. Indeed. And looking at the location, looking at the uniqueness of a golf estate in an urban city, one would say the appetite for investors would definitely be at an all-time high. Is it now a question to perhaps rethink on the pricing?
The question of pricing has not been the problem, actually. We find that even in a pandemic situation, we still have demand for our mega parcels. First of all, because of the uniqueness that you talk about. Secondly, because of the close proximity to a central business district. So we've never really had a major problem with pricing. And even when we do come across situations where people are asking for discounts, we are very flexible on how we can work around pricing, product pricing that allows people to buy, but also buy maybe even in installments. The issue is for us to continue having resources to keep the infrastructure works going on. Pricing, we have not seen that as a big challenge. Because I think from a comparable perspective with the rest of the market, I think we are still at a very good low price.
All right.
Yes.
And talk to us about those also, of course, arrangements for apartments under the Tulip brand. Talk to us about how will this pan out? I know there was a stalemate at some point, but what is the current state of affairs?
So apartments will continue to be a target project for us at MIGA. We have various locations where we have identified as locations for low-level and even high-rise apartments. So we are currently in the process of trying to identify new possible partners, investors, to come and set up shop. And do the apartments there themselves. We originally started with Mitiniscapes, and Mitiniscapes was 82 units, 70 apartments, and 12 villas. All those are now almost fully sold. I think we only have about 3 units remaining. And the reason we developed that was to showcase an example of how the type of apartments we want them done within the MIGA environment. And so we have a few interested parties, China-based type of investors who are looking at different parcels within the plot. We hope that we can also conclude with them shortly. It's just that I think during the pandemic season or time, a lot of these decisions have still been kept aside. But at least as far as discussions are concerned, those have been ongoing for a while.
All right. When we look at infrastructure and the government's plan for housing, we do know that there's a big 4 agenda. Housing is one of the pillars. And the government has been able to roll out a couple of incentives to support developers. How would you say this has impacted on the projects in the country? Because over and above that, we are still seeing demand for housing still remains unquenched.
A lot of the incentives that the government have introduced have mainly been focused to the consumer, the buyer, the person, you and me, who wants to own a house. And a lot of by the time the buyer comes into the market, you need the property to be developed.
Yes.
But the incentives that have been given to the developers have mainly been tax-related types of incentives. And so you still have to get the developer to a place where he builds the units and makes them ready for the buyer to take them up. And so there has been some kind of slow pace of the development process, and therefore the uptake would then come and take the developed units. So you could easily say a little mismatch in terms of the types of incentives and in terms of making sure that the developers are capacitated to be able to develop the units and then be able to deliver them to the market. So I think a little more needs to be done to ensure that the developers have the capacity to make the units ready. Now, from a financing perspective, especially in the financing space, you see, developers have to work with commercial banks, especially, to be able to develop these units.
Yes.
Now, in a market like this, you find that the financial institutions, especially over the last 2 years, have not been keen to do development of real estate because the market sort of tanked. And so while you have buyers on the other side in numbers, you have them incentivized to buy units, you don't have the type of units that those guys need to buy. And so you have a bit of a mismatch there. And so long as the financial institutions are still outside the market significantly to ensure that developers are creating the units for the buyers, you still have a bit of an issue.
Oh, yeah.
Yes.
And what trends and best practice should we expect moving into the future now that we're seeing the real estate landscape is very competitive? We are having multinational players coming in, working with the advantage of economies of scale, and this might eventually see our real estate market perhaps land in the hands of foreigners.
Mainly because it's a capital play.
Yeah.
By the time you develop an office building or a mall or residential apartments, the capital outlay is quite high. And one of the primary sources of capital outlay has been the banks. When the banks are not in the game, you have, as a developer, you're in business, so you have to find different sources. If that source is a foreign source, you will still use it. The color of money is the same, regardless of where it's coming from. And so while I'm here looking for capital to finish my infrastructure, I've looked locally. And if the local investors or the local financial institutions are not willing to support me to that extent, I will look outside. And so yes, to a large extent, at the end of the day, foreigners will still take a big play of the local real estate market because they are deploying the capital that I need. But also, let's think about it this way. Without that capital or access to that capital, there is no real estate development that will happen. This market is going to change a bit, especially with the impact of COVID. First of all, the commercial space, offices, is going to get a big hit. Why? Because first of all, we already had quite a number of square feet that had come into the market that don't have buyers. With the COVID situation, we now getting better understanding, realizing that do we really actually need an office? People are working from home quite comfortably.
Sure. As long as you have internet and a small home office.
Exactly.
Yeah.
And we are now starting to realize the importance of having a physical office where you've actually bought it has come down from where it was to somewhere much lower. So that's already a problem that we have to deal with, which means that new investors will have to look for different type of products. Even in the residential space, while we had all gone to the apartment side, we're finding that's going to change because with COVID pandemic, we are realizing, wow, your risk in an apartment is much higher than your risk if you are in a townhouse or if you are in a single dwelling standalone unit. So your choice or your choice of investment is going to be different in the near future. That's true. Which means that those of us who are investing in apartments need to start thinking differently. That's the landscape and how the landscape is changing. But we have to be ready as developers to start changing our way and changing the way we access client information to help us create the kind of product that clients is looking for.
Amazing. I like the new normal that we might be seeing in the coming days. And Mr. Awendo, as we wrap up, What lies in the horizon for Home Africa? You did take up the MIGA project, which has been running for a couple of years. And when you look at the big picture, what sort of other projects are you seeing yourself taking up? Are you in talks with NSC perhaps to raise capital for the near future in terms of investments?
Well, let me first talk about the horizon. We were set up originally to address the housing need in Africa. That mission is still viable. That mission is still valid. We think that that's really where we belong. We went into MIGA, we went into Morningside because at the initial stages of the business, we were looking for projects that can help us to generate capital, so that you have then sufficient capital to get into the business that you have set yourself up for. So unfortunately, it has taken us a longer time to exit MIGA, but it's going to happen because MIGA is not a forever project. We will get to a point where we'll have finished with the infrastructure, finished with the building constructions within the project, and then moved on. What are we going to move on to do? We will go back to our original mission, which is to develop housing for mwananchi, for kawaida people, you and me, middle income, looking at units that are anywhere around 5 million, 6 million, 4 million, 7 million, nothing more than that.
Sure.
Because affordability is an issue and we want to be relevant to our local population. And we think this is where we will spend most of our time in the medium to long term. That's the horizon, which means that we need to sort out the issues that we have right now, especially in terms of the fundraising for purposes of completion of MIGA. If we can get that out of our way, we can then focus on this area of developing housing for the common man and the common woman.
All right.
That's the next step.
Fantastic. Yeah. And Mr. Awendo, your parting shot as we wrap up, for those that are out there, they are saying they burn their fingers in investment in real estate. What would be your advice as a real estate guru to just give them some comfort as we move with this pandemic? Of course, we shall overcome it at some point, and life has to go back to normal. Yeah.
Two things. First of all, I like saying God is no longer in the business of making new land. So real estate will continue to be a prime investment opportunity for the human population anywhere in the world. So while you might have curves because of economic situations, because of health pandemics, because of things like that, over the long term, scarcity of real estate will continue to be there. And scarcity will always drive price, scarcity will always drive value. So at the end of the day, real estate continues to be a significant asset value holder for anybody or any family. So that's one. Secondly, when you have a house as an individual or as a family, you have ownership of the environment that you live within. That means that you will take care of the environment that is around the house that you own. And so you'll be more interested even in the political space that affects the environment within which you operate. Which means you'll be interested in your neighborhood and make sure that the neighborhood are at the same level of income, of prosperity as you, because it affects how you live your life. Which means that the value that you put on that real estate is very, very important. So even from a Home Africa perspective, we believe that we have such huge value because all our investment is in real estate. Unfortunately, real estate is a long-term investment. You cannot expect to put your money today and make your money tomorrow. Real estate is a long-term, you take a long-term view. Even if it's shares you're investing in, so long as the shares represent the interest of a real estate asset, it means that over the long term, you will still make some money. So long as the company is being managed well, the company has the right structures, it has the right governance within a regulated framework, you will eventually make money. So we expect that for as long as we keep our heads down focused on making the business work, making governance work for us, staying within the regulated environment, over long term, our shareholders will still smile to the bank.
All right.
Yes.
That's a perfect place to end it, as we smile our way to the bank.
Yes.
All right. Well, we've been speaking there to Mr. Dan Awendo, who is the Managing Director for Home Africa. Very insightful sentiments around the real estate sector and the prospects of the projects that they are handling as Home Africa. Well, we want to take a look at how the markets have been performing in our market analysis. Coming up. And that brings us to a close on this week's episode of The Trading Bell. We do hope that you've learned a thing or two when it comes to real estate, and of course some of your questions around the future of the MEGA project. You've heard it from the horse's mouth, and a lot is in the pipeline in terms of infrastructure rollout. So stay put and keep safe, social distance, and remember to always keep God first. Well, that's where we wrap it up on the program. My name is Agina. Thank you so much. Remember, you can engage with us on our social media handles appearing at the bottom end of the screen. And let's keep this COVID-19 out of our homes. Bye-bye for now. That's all we had time for here on KTN News.